United Payments Interface, UPI. This is perhaps the most revolutionary innovations that has come out of India. If you look at the transaction, the volume in transactions that has been done through UPI in 2022 alone, it has crossed $1 trillion mark. Since 2016, during the launch of UPI, and within just 6 years, crossing $1 trillion in volume transactions is a big achievement. And right now, it's not just India. Countries like Japan, South Korea, France are now interested to bring in UPI in their own countries. Now, with UPI seeing so much of success and so much of popularity, why did the RBI think of bringing another innovation in the country in the form of digital rupee? If you look at UPI, what does it do? It basically helps us transfer money from one account to another. Okay, digital rupee, in a way, it does the same thing. So why did UPI, or for that matter, why did digital rupee come in the forefront and now is a challenger to UPI? Let's explore. RBI defines digital rupee, which is also known as central bank digital currency, as a legal tender issued in digital form. Put simply, it is the digital form of our physical cash. Now, what is the difference between digital rupee and the physical form of cash? You see, if you have 100 rupees in your digital wallet in the form of digital rupee, you cannot really go and redeem it in the form of cash from any ATM or any bank. All you have to do is you can only use that 100 rupees of digital rupee only and only for digital transactions. Let us now understand why digital rupee has been introduced by RBI. Now, according to a concept note that RBI has recently published on digital rupee, there are three basic stated objectives for which the digital rupee has been introduced. Number one, to reduce the usage of physical cash in the economy. Number two, to provide an alternative to private cryptocurrencies. And number three, to provide seamless integration of cross-border payments. Now, I'll explain each of these three stated objectives in detail. First, about the reduction in physical usage of cash. Now, if you see, in the year 21-22, that is from April 1, 21 to March 31st, 2022, and approximately 5,000 crores has been spent in printing physical cash. 5,000 crores. Now that's a huge amount. Now imagine if this much of cash was not being printed, if all of us together did not use the physical cash that we do and rather transact using digital money, say UPI, this money would have been saved, or at least a part of that money would have been saved. Now, RBI wants to bring that printing cost down. RBI wants us to use less physical cash. You see, cash is a very inefficient form of transaction. It gets torn, sometimes you lose it. So it's not desirable to use cash in the economy. So how does one reduce the usage of physical cash? Only and only when we use more digital modes of payment. Now, digital rupee will exactly help us in that regard. Suppose I have 1,000 rupees of money in the form of digital rupee in my wallet. Now, this digital rupee, I'll not be able to redeem in the form of cash. I'll not be able to redeem it from ATM or bank. What do? I only use digital form of transactions to use that rupee. Right? Now, what does it mean? RBI will not require to print that 1,000 rupee in the form of physical cash. This is one way through which RBI is going or is desiring to stop the usage or reduce the usage of physical cash in the economy. Now, number two, to provide an alternative to private cryptocurrencies. Now you see, private cryptocurrencies like Bitcoin, Ethereum, Dogecoin, these are private cryptocurrencies. Now they run on decentralized ledger technology on blockchain. So what is the usage of this cryptocurrencies? First, they do not give out your identity easily, right? Second, these are not under any centralized control. And third, you can use them to earn money, right? For your asset appreciation. Now, digital rupee it's going to be based on blockchain technology, but the difference is it's going to be based on centralized ledger technology. That is, RBI is going to have complete control on the digital rupee. So it will be able to control the flow of digital rupee in the economy. In other words, it will be able to control monetary stability in the economy. Right? So RBI wants us to use digital rupee rather than using private cryptocurrencies. Now you see, there's a problem in this. When you talk of private cryptocurrencies, right now it's not legal in most countries around the world. But the reason why people still invest or buy cryptocurrencies is for asset appreciation. That is, you buy one Bitcoin or one part of a Bitcoin. You buy that with the desire or the hope that after a year or 6 months, that Bitcoin or part of the Bitcoin is going to appreciate in value. When it comes to digital rupee, there's not going to be any asset appreciation. A 1 rupee in digital rupee, a 1 rupee denomination in digital rupee will always be of 1 rupee even after 5 years, right? So now, if RBI does not allow asset appreciation for digital rupee when it's kept in your digital wallet, it will obviously not be a proper competitor to private cryptocurrencies. So we'll have to see how this pans out. But nevertheless, the second motive that RBI has is to present digital rupee as an alternative to private cryptocurrencies. And number three, the third stated objective that RBI has is to enable seamless integration of cross-border payments. Now you see, cross-border payments is still a pain point for us. The amount of commission that you have to pay is still a lot, right? Now RBI is wishing that digital rupee can be used as a mechanism to enable seamless integration of cross-border payments. This will be useful for everyone involved. However, the catch here is that a payment infrastructure has to be built, which right now is not in place. Now, these are futuristic vision or futuristic desires and aims that RBI has. Nevertheless, out of all these three, I find that reduction in physical usage of cash is perhaps the most realistic one, and which is possible maybe in the next 3 to 6 months. For the other two, we'll have to see how this pans out. Let us understand what is the difference between digital rupee and UPI. Ever since digital rupee has been launched, or at least the news of digital rupee being launched has come out, there has been a widespread confusion regarding the difference between digital rupee and UPI. Suppose, I'll give you an example, and with this you'll understand. Suppose you transfer 100 rupees to your friend. Okay, now you transfer that 100 rupees in the form of digital rupee to your friend. What does it mean? You have a digital wallet where you have 100 rupees of digital rupee, and your friend has a digital wallet where he can receive 100 rupees, right? Once you transfer that to your friend will not be able to redeem digital rupee in the form of cash. Your friend can use that money to do digital transactions only. Okay, so this is what happens when you transact using digital rupee. But now the same 100 rupees, suppose you had transacted using UPI. What does happen? What happens in that case? When you transact 100 rupees through UPI, your friend will be able to redeem that in the form of cash also. Why? Because UPI is a bank-to-bank transfer. Right? When you transfer money through UPI, UPI is just a platform which transfers 100 rupee from your bank account to your friend's bank account. That's the reason in case of UPI transactions, you will be able to convert the money into cash, but when it comes to digital rupee, you will not be able to convert that money into cash. Now, if you are just like me, like any average user, we might wonder, why should I then use digital rupee? If I transfer through UPI, I'm getting both benefits. I'm transferring digitally, that's one. And if required, I can also get the same money in the form of cash. So why should I use digital rupee? That's a very valid point. Now you see, RBI wants to reduce cash usage. We already discussed that. Now, if we start using digital rupee more, our usage of physical cash in the economy will go down. Right? So for an average user, just like you and me, we do not get much benefit. On the contrary, using digital rupee might just take away the power of us to use physical cash. But in the back-end operations, for the regulators, it's much better, for the economy, it's much better if we start transaction using digital rupee. This is the first point. Second point, when you do UPI transactions, there is a bank-to-bank settlement that requires to happen, right? For example, I have an ICICI bank and my friend has HDFC Bank. Now, when I transact using UPI, the money has to get debited from my ICICI Bank and it needs to get credited into my friend's HDFC Bank. Now, in that case, what happens? There is a settlement risk that is involved. Now, that settlement risk is extremely important. When it comes to digital wallets, there is no settlement risk that is there, because in case of digital wallets, the transfer happens real time. There's no settlement between banks that needs to be there. In case of UPI transactions, there's a settlement risk that is there. And that's the reason RBI, the regulator, wants us to decrease the usage of UPI and get into digital rupee, or using digital wallets for transacting digital rupee, right? It brings down the settlement risk in the economy. Now, this is the primary difference between UPI and digital rupee. Talking of private cryptocurrencies, which digital rupee is aimed to provide an alternative, obviously UPI does not come in here. UPI is just a payment platform. It's a payment infrastructure. And about cross-border payments, yes, here UPI also can be a competitor to digital rupee, but again, even for UPI, the payment infrastructure has to be built. Works are on. There are different countries which are interested in UPI transactions. If that happens, maybe cross-country transactions, say from France, South Korea, where UPI is already being explored to be launched, we might find ease of payment of cross-border payments through UPI much more handy as compared to digital rupee. But again, this is something that time will tell. We are not yet sure. For now, the main difference lies is in the usage of digital rupee and UPI. When it comes to digital rupee, you cannot convert to cash. When it comes to UPI, you can convert to cash. When it comes to digital rupee, there is no settlement risk involved. When it comes to UPI, there is settlement risk involved. So now it is quite clear to us that for a user, for an average user, the UPI transactions in a way are more beneficial, because we have that extra added advantage of redeeming it into cash, right? But the question is, for the economy, of course, reduction in usage of cash is much better. Now the question is, how can RBI enhance the adoption of digital rupee in the economy? Now I suggest there's three measures through which adoption of digital rupee can be enhanced in the economy. Number one, making UPI transactions chargeable. Number two, allowing interest payments on digital rupee holdings. And number three, transferring government benefits, subsidies in the form of digital rupee to the beneficiary's account. Now, I'll explain each of these in details. To begin with, making UPI transactions chargeable. Now, this will raise quite a few eyebrows, I know. But you know what? In December 21, the RBI had come with a discussion paper where RBI had sought feedback about different charges that can be or should be levied on different payment infrastructure like RTGS, NEFT, UPI, IMPS, and all of those payment infrastructures. Now, you know what? Except for UPI, all of the others, IMPS, NEFT, RTGS, these are already chargeable. Now, this created a lot of concern that UPI was not chargeable. So does it mean that RBI wants to levy charges on UPI transactions? This created quite a stir in the country. The finance ministry had to come forward and had to tweet that the ministry has no plans to make UPI chargeable anytime soon. Okay, now what does it mean? That UPI is not going to be chargeable for sure, at least not for now. But you cannot have a facility, a service for free forever. You need to find some ways to redeem the cost of holding the infrastructure, right? So if not today, there may be a time when UPI transactions will be made chargeable. Now, if you want digital rupee to be adopted by everyone in the economy, I would suggest UPI has to be made chargeable. Now, obviously, this is not going to be a popular opinion. Even I personally would not support that. But if digital rupee has to be adopted, if its adoption has to be enhanced, something has to be done with UPI transactions, because right now UPI transactions any day will be preferred by the average user. Okay, so this is the first way. Second that I suggest is to allow interest on digital rupee holdings. Now, as per RBI's concept note, RBI is not going to allow any interest to be accrued on digital rupee holdings. Why? Because RBI wants digital rupee to act just like physical rupee. Now, when you have physical rupee in your physical wallet, do you get any interest? Of course not, right? So the same way, RBI does not want to give any interest on digital rupee holdings when it is kept in the digital wallets. Now, with this, of course, it's going to mimic the physical rupee. However, if digital rupee does not accrue any interest, this again will not be an attractive proponent as opposed to UPI. Now, there are good reasons why RBI does not want to give interest on digital rupee holdings. Number one, it is going to bring down deposit rates in the bank. Now, when that happens, number two, what will happen is it will impact the credit creation in the economy, right? So there are good reasons why RBI does not want interest to be accrued on digital rupee holdings. But perhaps what can be done is a middle ground. Like, there can be a provision where if digital rupee holdings exceed a certain amount, say 1 lakh or say 5 lakh, if digital rupee holdings exceed a certain amount, then interest can be accrued on it. For example, if your digital rupee holdings accrues goes say beyond 5 lakh rupees, then perhaps you can get some interest based on the entire holding, right? If your digital rupee holding is below 5 lakh, no interest is going to be accrued. Something of that sort perhaps can be thought of. This will make digital rupee more attractive. And finally, the third point through which I believe digital rupee adoption can be enhanced is when government benefits, subsidies given to beneficiaries are given in the form of digital rupee. For example, DBT, direct benefit transfer, right? If that is given in the accounts of the beneficiaries in the form of digital rupee, that will enhance the adoption of digital rupee. Because once you have government benefits in the form of digital rupee, obviously this cannot be redeemed into cash. Now, obviously the beneficiaries will have to do digital transactions. This will go a long way in enhancing the adoption of digital rupee. Out of these three measures, I think transferring government benefits in the form of digital rupee is perhaps more realistic and something the government can seriously think of. Digital rupee is still at a very nascent stage. A lot has to be done before digital rupee is adopted universally across the country. Now remember, UPI right now is at a much better position. Okay, it's more established. For an average user, it is much more beneficial. But for the economy, for the regulators, digital rupee provides much better benefits and much better advantages. Right? From an Indian economy perspective, I think the more you use digital rupee and we reduce the usage of cash, it's going to be better for us. You know what? UPI, when it was first launched, in the first 3 months, its adoption was very low, right? But gradually it picked momentum. The same perhaps may happen with digital rupee as well. It's just launched, it's still in the pilot phase, but when it is launched across the country, I suppose that the adoption will also increase and the RBI, the regulators, the government will do much more to ensure that people find digital rupee more attractive than it is right now. Thank you for listening.